Hey everybody, Kyle, not your average finance guy. I got a couple of comments on a short that I put up a couple of days ago, and I'm really glad that this comment came up. This took super long for me to understand as well. So I'll show you this short here in a second. And the comment, yeah, you're making 6% while paying 7.5% on the loan you took out. And someone else said, yeah, I didn't say it, someone else did first. So let's take a look at the.
Say you're gonna buy a $20,000 car and you save up and you save up and you get your savings account to $20,000. Once you buy the car, savings account is gone, right? So now I guess you could keep making those payments and get that savings account built back up. But what the infinite banking concept does is, say you got that, you saved up $20,000. What we're gonna do is you're gonna borrow against it. Okay? You're not actually taking your $20,000 like you would in the bank. You're not taking it out. What you're gonna do is you're gonna borrow against it because it's like death benefit. You borrow against that, this $20,000 still grows at whatever the dividend rate is. This year it was I think it's six point something. Say you're gonna buy a.
Okay, so with that, if you could follow along with that, the comments here, yeah, you're making 6% while paying 7.5% on the loan. Well, that's not true because right now, as we said, I literally just looked it up, and my entire cash value, all of it, is growing at 6.64%. Okay, and that's compound interest. So that means every day they take the balance and they apply that interest rate, that dividend rate, and the entire balance grows by that one day. And then the next day they take whatever that new balance is. So every day it grows and it grows and grows a little bit. It doesn't make a huge difference, but it does make a difference. So compound interest is what is it? Who said that? Einstein said it's the eighth wonder of the world. And those who understand it earn it, and those who don't pay it, there you go. We're earning it through this IBC policy. And then it says, meanwhile, yeah, you're paying 7.5%. Well, no, because the loan that I can take out against my policy right now is 5.68%. And that is not compound. That is not an amortized loan. That is simple interest. So you're literally earning compound, which is the best, and you're paying simple, which is the best if you're paying it. Now, if you don't want it the other way, you don't want to earn simple interest and pay compound interest. So those are the big deals. But even with that, let's throw out the simple versus the compound part of it, and let's just look at the numbers. I'm making 6.64%, and I'm paying 5.68%. Okay, that's 1%. Okay, let's just call it, for all intents and purposes, let's just call that 1%. So I've got money in there, I'm using it, I'm taking loan, I'm still making a 1% spread. But what is 1%? Well, 1% can add up pretty quick. All right, let's open this up. What's 1%? Say you got $10,000 cash value. 1% is $100. Let's say you got 50,000, 100, all the way up to $1 million. If you're making 1% on $1 million, that's $10,000. All right, so 1%, even though it doesn't sound like much, it isn't much. Why not earn it? Why not have your money going two places at once? So I hope this took me so long to understand it. I hope that I can help you guys understand it too. It takes a lot. I get that. So long story short, this still does somewhat act like it is a loan. When you take out a loan against your IBC policy, it is a loan. If you don't pay it back, you don't have to, but you can't use it again. What happens in 5 years when you're going to need another car? As long as you make those payments back, instead of making it to a payment or to a bank, make it to your bank, to the IBC policy that you control, and then in 5 years, whatever it is down the road, you have that money plus the whatever it grew in along with dividends, and you have access to all that again. So I hope I'm helping to clear the air versus muddy it, but I just kind of wanted to try to hit that from another angle because I know it's so hard to grasp, and it took me forever too. So I hope this helps, and please let me know if you got any more questions, and keep the comments coming. It's how we all learn. So thank you.